Good morning. Thank you everyone for coming today. We'll go ahead and get started. Welcome to the Anchorage Trading webinar. We are going to be talking about current state of crypto, DeFi, as well as challenges and opportunities for institutional investors entering the crypto space. We have our two panelists, Yuriy Anosov from Anchorage, as well as Sherwin Dowlat from Polychain. I'm the moderator, Sarah Rovi. I am from Anchorage and I am on the marketing team. But I will let our two panelists introduce themselves. Sherwin, how about we start with you?
So the firm is split up between ventures, a liquid arm which holds coins, and then internally engineering and staking on different networks. So pretty heavy activism. I spend most of my time managing our liquid portion, which is our coin portfolio. Prior to this, I did a lot of crypto research. I also worked at Susquehanna in research, and then I'd done pretty early research before mining Bitcoin in my dorm room way back when. So I've been in the space for quite a while, and yeah, happy to be here.
Yep. And hello, my name is Yuri Anisov. I work as the trader and head of brokerage here at Anchorage. I've only been in crypto for about 2.5 years now, so not quite as long as Sherwin, but I started off with DeFi Capital, which is a quant crypto fund focused on algo market making, and then Anchorage has been my second crypto home. Before crypto, I spent about 10 years at Goldman Sachs Asset Management. Most recently, I was a fixed income trader working on the money markets portfolio management team.
Great. I will also add that this is being recorded, so it will be on demand for anyone to look at afterwards, or for you to share the link with people who you would like to see this as well. Without further ado, we'll get started. So to both of you, given your professional backgrounds and your roles at Polychain and Anchorage, what are you seeing in terms of demand for digital assets? Where's the demand coming from, and in what ways has it changed since you've been in the crypto space? Sherwin, I'll let you start on this one.
Sure. So I got started. I pretty much first learned about Bitcoin in probably mid 2012. And back then, I think the difference largely from then until now is that obviously the entire audience has just grown since then. But within the actual industry, I mean, back then it was largely just Bitcoin. And then also there was a real lack, I think, of liquidity. And in terms of security, it was just the bare primitives. And so, I mean, back then, pretty much all liquidity was on largely one exchange. And security, I mean, you didn't have very many options. And now it's grown quite a bit. You have lots of new product structures that have allowed different types of traders and investors to come into the space, as well as the security. And I think you kind of need both those things. So it's been encouraging over the years to see it kind of grow. Larger players like you guys stepping in to help, you know, with both these components. And so, yeah, that's a bit on how I've seen it.
Yeah, I think lately what I've seen is that folks are more and more interested in, you know, security, making sure their assets are at a qualified custodian, making sure that things are insured. And the reason I think for that is everything that our clients want to do with their assets, they seem to be focused on the fact that they don't want them to leave the secure custody that they have basically signed up for. So it really forces organizations like ours to really work with, you know, exchanges, OTC dealers, you know, staking providers, and any other kind of third parties, so that they can, you know, our clients can use their services without necessarily moving, you know, coins outside of custody. So I think that trend has really been exacerbated, you know, here in 2020 and just recently.
Nice. Yuri, I'll forward this question to you. Microstrategy's August announcement and recent Bitcoin buy, one of the latest mainstream giants to enter crypto, has gained a lot of attention. What do you think this signals in the market?
Yeah, this is, I think, one of the most exciting things that happened as far as, you know, the crypto institutional adoption goes. What I found specifically interesting about the Microstrategy case is that they put such a large portion of their liquid assets, their cash equivalents, into Bitcoin. I believe it was something like in the 50 to 75% range, right? Now, I do expect that there are a lot of companies out there that are publicly listed, same size, maybe even bigger, that are also looking at allocating, to Bitcoin. Now, even if those allocations are going to be more subdued, maybe something in the 10% range, I do still think that that is incredibly significant, given how relatively small the crypto markets are in general. And the fact that, on a notional basis, how MicroStrategy was able to really buy up all that Bitcoin without really moving the price, I think really shows you how far the markets have come. I recall that you usually, whenever such a big buy happens, the prices react very significantly. And I think here, we've seen it a little bit more subdued, which is definitely good for the ecosystem.
Yeah, Sharon, you want to add anything?
No, I think Yuri actually put it pretty nicely. And I think at a macro level also, I think what I've noticed is throughout the years, it's kind of like this communication between crypto exposure and corporations. Obviously, in this instance, it's their balance sheets, their treasury management, right? But also, I've noticed within other industries that are exposed to crypto in general, it's becoming hard for them to ignore. I just remember in 2017, although it was one year when prices were up substantially, but I mean, there were a lot of these companies, these semiconductor companies, which I covered closely, where it was to the point where Bitmain, this ASIC manufacturer that was creating some obscure chips for this new Bitcoin, was actually making substantial income off of it. Obviously, again, with rising prices, but the idea was it forced a lot of these companies to look at their own activities and go, why aren't we actually using these semiconductors for mining these coins or doing something involving in this area? Higher margin, obviously, and in different parts it might be more appealing, but and yes, again, prices were up, but I think the trend, and in addition to what MicroStrategy has done with their treasury management, it's just overall becoming harder for them to ignore. And I think this is just a giant signal for the entire space. So bullish signal, yeah.
So talking about prices, over the last few weeks, Bitcoin has been hovering around 11,000. DeFi, which we'll get into a bit later in this webinar, is surging. And the newest Fed rate and inflation announcement has caused a lot of market volatility and speculation. What are your thoughts on recent events in the current crypto market? Sherwin, I'll give this one to you.
Yeah, sure. So I think actually for quite a while, the real punchline has been, crypto has very low correlation overall to traditional market assets like equities and metals and everything like that, and rates and all that, but the dollar. But recently, absent March, which was I think a complete risk off sell off where everything kind of sells off in unison, we've actually seen much tighter correlation in crypto to safe haven assets like metals, and then also inverse correlation to dollar strength. I think both of those things are actually pretty encouraging. That's been kind of the like I said, kind of the punchline or the goal. And so now we're kind of seeing that strengthen a little bit. And Yuri, I'm not sure if you want to expand on that and the Fed actions.
Yeah, look, I think probably the most interesting guidance from the Fed was that they moved their inflation goalpost, right? So during the virtual Jackson Hole conference, basically Powell said that we are going to be targeting a rate that we're basically no longer going to be targeting a 2% rate, which has officially been their policy, I want to say, since 2012. And then before then, they never really moved those goalposts much either. It was always targeting a pretty low inflation amount, right around the 2% level. Now, the fact that they have announced this, I think it kind of sets them up because, Powell and all of them, they understand obviously that inflation is a lagging indicator. They get rid of the goalposts and, us folks in the economy, we're not going to be seeing the true effects of inflation probably a year and a half, 2 years down the road, right? So the fact that they removed this now, I think kind of sets up Bitcoin to, I think, perform well over the next 2 years as obviously, the issuance is finite there. And then as the dollars that keep getting printed, it will propagate through the system and the velocity picks up. I think we will see, again, a positive impact for Bitcoin because of the Fed actions.
And shifting over into more CBDCs. So as we see more of those central bank digital currencies being introduced, what is your take on how the addition of these currencies will impact the market? I'll let either one of you start. Yuri?
Sure. Look, I think CBDCs are a very interesting development that I think the government's really just started kind of making plans and scoping out what this is actually going to look like end of last year, mostly during this year. And I think, the China CBDC, and if there's a United States dollar CBDC and whatever other country, I think all of them are going to look a little bit different. Now, I have this vision that perhaps, 5 to 10 years down the road or whenever it comes, I do think that there's a possibility that Bitcoin, given that how global it is and how little barriers to entry it really has, whether you're a government or a retail user or anything in between, a lot of these CBDCs perhaps will be priced against Bitcoin. Through human history, I won't go back too far, but starting with a Dutch guilder as the reserve currency, then moving to the British pound, and then obviously to the US dollar. It's always been a nation state that controlled the reserve currency of the world. And I think, Bitcoin is one that is not controlled by a nation state that may possibly, hopefully, be the reserve currency. And other CBDCs will be priced against it, which I think is a good thing because, it will not allow the reserve currency nation to basically print away any problems that they have, print away any debt that they've been issued, and so on. So I think it'll make countries a little bit more accountable for the policy they put forth.
And I think tagging on to what Yuri mentioned, I think at a more fundamental level also, people perceive these currencies to be competitive with cryptocurrencies. And I think the notion that they're similar is pretty misleading because inherently they are different. They're still controlled by a central party. They're very different than these cryptocurrencies like Bitcoin or Ethereum and things like this. And their incentive structure is different. But when you actually, peel it back, even things like Libra and all that, what they really introduced that I think is pretty powerful and actually very beneficial to our ecosystem is this technical talent and support within it. And I think a good early example of this was like JP Morgan's, what's called Quorum. And Quorum was essentially a private fork of Ethereum. And initially you go, well, this doesn't help Ethereum's, coin price or whatever. But what it really did was breed an entire, quite a few, an entire engineering team of, hundreds to say the very least at JP Morgan that were being bred to be Ethereum developers because a lot of the infrastructure is the same. And so when they're developing on there, it translates to our entire ecosystem. I think Libra is awesome because it's bringing the quality and talent of Facebook developers and different bits of infrastructure like different wallets and user interfaces and things like this to our ecosystem. So it's kind of just helping out in that sense where, again, infrastructure, I think, will benefit from these. So that's my take, yeah.
Kind of going back to that initial question that I asked you guys about what you've seen in terms of demand for digital assets, compared to when you both entered the cryptocurrency industry, how have barriers to entry changed and how have you seen them changing as the industry continues to mature? Sherwin, I'll let you start.
Sure. So like I mentioned before, in 2012 or whenever, it was pretty much just one exchange. I think something very powerful is, we're trying to get away from the banking system, but actually fiat openings to be able to trade crypto to exchanges are pretty powerful. And so when you actually have direct fiat integration through places like Coinbase or Gemini and these kind of places, it was actually really beneficial for the ecosystem. And so you could have a lot more normal people come in with a lot less difficulty rather than initially where it was there's way more friction involved in actually buying it from, the fiat in your bank account to actually getting this coin. And then once you got it, where do you actually hold it? Well, now we have, I think, much more user-friendly ways, although we're still pretty far off. But Coinbase is a really simple app. They've got the custody, but then also if you want more, inherently technical custody, that's a little bit stronger. You can use, for the average retail person, I think, you got the Ledger Nano, which is like a little tiny USB thumb drive type hardware device. And then for institutions, they have people like Anchorage and larger custodians that are stepping in. So I think just, it goes back to what I mentioned before. both the liquidity and exposure to the liquidity, and then also the security. Those things are like you need those. Those are critical. And so both have improved substantially for not just retail that comes in, like mom and dad in 2017 that, oh, just download this Coinbase wallet or whatever, and you can go trade and store your coins there. But also, institutions as well, coming in, wanting to buy pretty large size, like Yuri had mentioned, Microstrategy buying several $100 million of Bitcoin and barely, not even really moving the price of the market, and having the tooling to do so by themselves. That was actually, I thought, pretty, it said a lot for the space and how much it's developed, because just a few years back, you couldn't really fit that size in, even if you went through, off exchange desks. So I think it's matured quite a bit since then,
Yeah, I think that's the right way to look at it. Is like there's the retail experience, the barriers to entry, and then there's the institutional one, right? Retail, I think, has gotten just miles better, right? I think for the average person to get a Bitcoin account, whether it's on Kraken or Coinbase or whatever equivalent platform, is just a much easier user experience because companies have been specifically focusing on that, right? And institutional. I think, one of the main drivers I've seen here is that, KYC AML has gotten more standardized. It's gotten more serious. And I think, any authorized users of an institutional, firm are going through a lot more scrutiny with more professional kind of compliance folks, at bigger firms like, Anchorage or the equivalent, right? So I think that's kind of been the big difference. And then, regulations, I think, are coming out, and there's a little bit more guidance from some of the US regulators. Obviously, it's still a long way to go, but I think that's really been helping the institutional experience out a lot compared to, let's say, 2.5 years ago.
And talking about institutions, what are some of the challenges institutional investors are still facing when entering the crypto market? Yuri, since you finished that, I'll let you pick it up.
Yeah, so, if you're an institutional client with a bigger AUM and you're not crypto native, there's still a large learning curve, right? If your entire career you're settling things through DTCC and your Bank of New York, State Street type of custodians where everything's an email and the most complex code is really like some 8-line Swift message, right? It may be a little bit tougher to really understand some of the computer science and everything that kind of goes behind the scenes of sending Bitcoin, securing Bitcoin, and how it all works, right? So I think it's important that us as crypto native participants and folks that have been around for a while, we're as much as educators as we are salespeople or anything else, right? And I think to really lower those barriers, Sarah, that you're asking about, I think we just need to continue educating as more companies come into the space. And, going back to MicroStrategies, which I feel like we keep alluding to for every one of these questions, I think their CEO's like doing a good job, like kind of going the podcast circuit and kind of just talking through his experience and being very transparent about how his firm got into Bitcoin. I think a lot of folks, that are looking to get into the space are paying attention.
And I think zoning out kind of to more fundamental research type level, what was most appealing to me actually about crypto initially when I first learned about it was actually how to value it. I spent a lot of time, because what you'll see a lot of times is price and more technical analysis related, like valuation and prediction, but understanding how to fundamentally value it is actually very important for a lot of these new entrants, especially the institutional entrants. And I think even understanding its different traits, it's not a cash flow bearing asset. It's actually a digital commodity. And it's probably the first real digital commodity we've ever had. We're basically combining software and data with value and money. And we're still really, really early in just understanding how to value this. How do you make any sense of it? And so I think just that maturity in terms of the research, kind of like Yuri mentioned, just education is pretty important, I think, to get larger entrants coming in and just more people generally.
And then on top of like the challenges, what are some of the opportunities that institutions are coming across in the crypto landscape?
I think that's also, by the way, I'll tag on that too. That's also the opportunity, right? Is
Mm.
understanding it before, because when you actually get pretty deep in the weeds, that's kind of the edge, right? Getting in and understanding it before other people. And I think actually, I've never really heard someone who thoroughly understands it, who's actually been turned off and put off by it. So I think that actually is kind of the opportunity, is the giant challenge for most people that can't really learn about it. If you actually put your head down and work, it's actually can be actually quite an opportunity pretty early on. Yuri, I don't know if you want to add to that. Sorry, I took that. Yeah.
No, I think the opportunity is just exactly how you mentioned it. There are so many things that crypto can do through smart contracts and things like that, right? That the opportunity is really for large institutions to be a lot more lean of how they run their operations. Like, let's take a large Wall Street bank, right? I think a lot of people think, well, at every bank, there's a ton of traders, ton of bankers, right? But really, those are some of the smaller divisions of a bank. From my Goldman experience, about a little bit more than a third of the firm were actually just tech folks that were just supporting different systems that we have at the firm. Another third is just operations people who are do everything from account onboarding to just facilitating trades. And then obviously there's other support departments, but the front office, like bankers, traders, that's actually a very minority. And I think with blockchain technologies, a lot of these firms will learn how to run a lot leaner, minimize their errors, fails, and other things like that we kind of take for granted in the traditional markets.
Kind of changing gears, shifting gears a little bit, moving more into the DeFi discussion. One of the key things that we've seen in the DeFi space has been an exponential amount of liquidity and capital locked into the DeFi infrastructure. What is so alluring, if at all, to you about DeFi, Sherwin, as a portfolio manager at Polychain?
Yeah, sure. So we've invested since pretty early on in DeFi broadly. And I mean, when you actually zone out at a pretty macro level, I think that the first bit of DeFi you actually saw was in the ICO phase in 2016, 2017. And I think that when you saw that, at first glance, it seemed like, oh, this is just a way for people to steal money or whatever. But it's really a way for capital to be coordinated and pooled in new ways that actually you haven't really had before. And along with what I mentioned before, like you now have this way to combine software with money. So like there's that saying that's like software will eat the world or whatever. And it's like now markets and liquidity will kind of eat the world, because you can now open up bits of liquidity at kind of anywhere that you have something digitally that opens it up. Now that you have a way to actually run this value through it. And now what we're seeing is it's kind of been shifting recently to, I think, more complicated mechanisms and ways to pool capital, but it's maturing. And I think at the crux of it, to me, it's just that markets and liquidity will flow through kind of everything digitally. That's the real takeaway.
Yeah, there are two interesting things about DeFi that I kind of want to mention. So I think it kind of plays a little bit with my last answer that I gave, in that, for example, like a fixed income portfolio manager, like his job is to come in and basically just allocate to different bonds so that the daily yield is kind of maximized with, accounting for all the compliance and all the rules and all the guidelines that the portfolio is supposed to be built in, right? Now, in DeFi, for example, you have something like, like YFI, for example, that kind of does that, automatically, right? So that's like an entire portfolio management kind of traditional Wall Street job that's been around since, as far back as fixed income portfolio management goes, that, a DeFi platform is looking to automate that, right? So there's a lot of interesting things like that are a little bit more transparent and how they're going to work. Like, is YFI perfect? I don't know. But I think it's a really good kind of project to kind of, see what can be done in a more automated, transparent way. And then the other thing I wanted to kind of comment on is the DeFi kind of congestion that I think we've seen, through early September, with all the different protocols that have been going up and a lot of the activity there. We saw gas fees for the Ethereum blockchain network kind of go up like exponentially, right? Like, 400 plus Gwei, et cetera, right? And then we kind of saw the same thing last week with the the Uni token airdrop and everything like that. So what I've really noticed is that Ethereum 2, I think, is now more in focus, and other blockchains where you can build smart contracts on top of them, like Tron, Solana, Neo, Cardano. There's a ton of them out there. But I think folks are kind of thinking, well, maybe Ethereum 1 isn't like kind of everything, how it's kind of been so far in the crypto smart contract world as far as the concentration of where tokens are built on top of.
And Sherwin, you kind of touched on this a little bit in your answer, but what is different about this current DeFi trend than the 2017 ICO trend? And what should institutional investors make of this current DeFi trend? Or is it just that a trend for 2020 that's going to go away?
Yeah, sure. So kind of as I mentioned before, I think the common thought is to take it very much at face value and kind of just the first glance of it. So ICOs, kind of scammy and crude, but really peeling it back, again, it's a new way for capital to be coordinated and pooled into pretty much ways that you've never have been able to before. And so now when I actually think about it from then until now, a lot of these designs that we're coming out with now are much more intricate. They're a lot smarter. They're a lot more thought through. Yes, we have errors, but this is, of course, the first iterations of kind of what will probably grow significantly and allow for again, usage that we just couldn't get before. And so I guess when institutional investors are thinking about it, is this another trend that blows by in 2020? These are all incremental steps of improvement to automating and allowing liquidity to flow, as I mentioned before, through this term, which is like broadly DeFi, but it's really just liquidity flowing through all these different places and largely autonomously, and allowing the community to participate and benefit. And it kind of runs, and it's kind of this own autonomous ecosystem in and of itself. So really, this is just another incremental step in improvement from what we saw before. And when I say incremental, I mean, this is a huge, huge step. When you understand how some of these systems work, like Yuri mentioned, YFI, it's very complicated. It's well thought out. And the way that the governance is structured, how it's all controlled, is also thought out. And there's pretty smart people contributing to these conversations on how to actually take it from here to the next step. So if the first step was from 2017 to this, I'm really excited to see what the step from here is until, 3 more years out or whatever.
Yeah, I don't have much to add to that answer. It's pretty much on par with how I feel. I just remember 2017, kind of when I started really, researching crypto for the first time. As I recall it, thinking back on it, it was mostly just white papers, promising to do, stuff, right? And please fund us, we're going to do all this, right? And I think now when I see a lot of these new platforms coming out, there's actually like a working product already there, not just something that was written about, right? And I think the key word here is the accountability has gotten a lot better. Like, I know that this is kind of a strange, very crypto-specific example here, but if the audience recalls, the sushi swap, kind of what happened there, right? The creator of it, decided to kind of benefit himself for a little bit, but then because he was ingrained with the DeFi community and worked with folks like Alameda, et cetera, right? He eventually went back and kind of taking some of the money out of there, and SushiSwap was taken over by kind of like a quorum of folks, and is now a platform that looks to be doing pretty well, right? So in 2017 that would not have happened, I don't think. So I think that's kind of the biggest difference, and the fact that it's such a stark difference in 2 years. Sherwin, I think, put it right. It's like very excited to see how that keeps developing.
Nice. And then Sherwin, can you talk a little bit about how the crypto native leverage on the various platforms impacts price volatility?
Yeah, sure. So I think that without diving deep into our ecosystem from the outside world, something like a March when global markets were kind of crashing from this COVID, and crypto, of course, got hit, and everybody saw that, right? But when you actually dive in and you understand why the price was so magnified in our space, it's because of how the market structure is set up. And as I mentioned before, initially in like 2010, 2011, 2012, you really first only had spot Bitcoin on these exchanges. It was just the actual Bitcoins, no margin, no leverage, no nothing, trading on the exchanges. And then in 2016, BitMEX introduced kind of the first, I think, really novel product in our space, which is called the perpetual swap. And it's basically a futures contract that is perpetually, it doesn't ever settle. It just has a very short-term kind of like funding rate that off-sided traders pay to each other to kind of enforce and match upon an outside price feed. So it's actually not really touching the actual coin. You can argue in ways that it does, but it technically, the price feed is separate, unlike a normal spot market where it's directly created right there. And so what happened in March was very interesting because it was the result of this new product coming out since 2016, right? That had gathered quite a lot of hype. And it kind of tagged on to this, to the viral nature of what we have in crypto, which is a lot of retail traders, a lot of people that want to swing price as hard as they can. So you get a lot of leverage. And then it was a lot of concentrated liquidity. So a lot of this leverage was sitting on pretty much one exchange, mostly, which was BitMEX, and just a couple others, but largely there. And then you get to a certain point where that amount of liquidity, when you understand the dependencies that it has, when you have liquidations or any hard sort of price change, it triggers these liquidations, which basically make these, these bankruptcy calls essentially that ripple out towards spot exchanges like Coinbase, like Kraken, wherever they're getting that outside price feed, as I mentioned. And it just got to the point where it kind of broke it because these leveraged futures were trading, 10x what the underlying supported spot exchange had and was trading. So kind of couldn't handle it. So you had this like magnified price impact or this amplified price impact. And I think since then, we've actually seen very healthy dispersion of liquidity. So now we've had other exchanges, absorb some of those flows, those outflows from BitMEX, and it's much more spread out, right? But it's just like what happened initially with the spot markets, right? Where you had one exchange that was Mt. Gox, a very early exchange that had 80, 90% liquidity. It got blown out and then it went out. And then you saw liquidity kind of spread out to new places. I think this is pretty normal in a market that's growing like this. And especially as we go through the different product structures and types, especially with derivatives, understanding the nature of them is pretty important. And so understanding market structure, in that time was pretty important because that's the difference between falling 60% initially or falling, 10, 20% in a normal market. This is a very early market with pretty crude setups. And yeah, Yuri, I'm not sure if you want to expand on that, but.
Yeah, sure. I'll hit up a little bit more on the rolling liquidations on platforms like BitMEX. The one thing the traditional markets don't really have is 100x leverage or something like that, right? Like, even if you look at some of the more riskier hedge funds out there, even when they have like the most stark conviction, they may get themselves up to, I don't know, like 8x to possibly like 15x or something like that at its higher range, right? I think when I was trading for one of our fixed income macro funds back in the day, 5x is really the highest we were really comfortable with, right? But because of these 100x exchanges, that were at BitMEX originally, and now there's, 2, 3, 4 other platforms that offer it, you see these kind of dynamics that Sherwin kind of just talked about, right? Now, as we have more of these more traditional institutional clients come into the space and start owning more Bitcoin and other tokens, the rolling liquidations on 100x leverage platforms, they'll be just much more subdued because the folks that are willing to lever themselves up that much become a smaller piece of the pie of the total kind of big Bitcoin liquidity. So although, like Sherwin mentioned in March, it was very, the graph basically was like drop and then bounce back up above where the liquidations kind of started, right? About halfway through the whole drop with a 50% retracement. I don't think you will see anything that exacerbated in Bitcoin specifically as more and more kind of traditional institutional customers come in.
And I know you're talking about liquidity right now, but from a brokerage perspective, where do you see liquidity today and going forward?
Yeah. So again, I think going away from spot exchanges, you see, like, for example, if you look at the numbers of the CME this year, I mean, they've just been killing it out there with their futures product. They also launched options, I believe in February, I think was the official launch. And the options product has grown a lot. Bach platform, the ICE platform, has also been picking up a lot of volume as of late. So you see a lot of these types of platforms, offering a lot of liquidity for participants. And these are really good signs because, in order to trade on a CME, like, it takes a lot more of a sophisticated client to do it because, you do have to have an FCM. You have to have an NFA registration. There's a lot of hoops you have to jump through regulatorily to really access these liquidity pools. So the fact that those volumes have been growing just speaks volumes for the industry. And then, you see a lot of spot exchanges, like some of the crypto native ones, they're starting to offer, futures products. I know Binance kind of launched, not only a futures exchange, but also, they're working on the DeFi exchange, same with FTX and Project Serum and things like that. And you just see a lot of, different liquidity pools coming in different shapes and sizes than, kind of like Sherwin alluded to, that we had, Coinbase and Mt. Gox and, just spot exchanges that, crypto has only had those for years, right?
And following up to our last question, as you both have mentioned throughout the presentation, we continue to take incremental steps towards more education and more institutional adoption. Kind of where do you see this going forward? And what are you most excited for? Sherwin, I'll start with you.
Sure. So I guess thinking pretty far out, but actually it sounds far out. And I think, 8 years ago or whatever, it sounded even further out, but it's just getting closer that all institutions will have to have exposure to this. Whether it's from the treasury side, like this Microstrategy move. I've also had thoughts where, there's a lot of times where, crypto comes in through people hacking different systems, and you've seen large international companies have to buy Bitcoin or, Monero or Zcash or one of these cryptocurrencies to actually pay off these hackers. Some allocation will have to be reserved for cryptocurrencies, and we're just, it's on a scale, right? Initially, it was just purely a little bit of the niche, this much amount of retail, and now it's sliding to where everybody's becoming more exposed, or will have to become more exposed. We've seen, Jay Powell address this. Our own government has addressed this several times. It's stuff that we really didn't think 6 years ago would happen. It's becoming too hard to ignore and a little bit too compelling to ignore in many regards. So much more exposure, I think.
Yeah, I'll take a little bit different approach to that question. I'm most excited about, I think, just some of the tools we're building, like at a brokerage space and the custody space, that allow institutions to, just have an easier process of managing portfolios, moving money around, keeping assets for their customers safe, et cetera, right? Like, I'm very lucky that I get to work in a brokerage product, and I kind of get to see what types of clients come in, right? Like, I like just listening to, for example, somebody who manages trust accounts and the needs that he has versus somebody that, is a hedge fund that trades like 60 to, 100 times a day, and the needs that they have, and all the different things that the blockchain kind of infrastructure can really help in either of those cases or anything in between, right? I think the traditional financial world, everything is so, it's just so ready to be more efficient and unoptimized. And I'm not talking about like the trading itself. I'm talking more about everything that happens post-trade. A lot of the stuff that, your average person doesn't see, right? Whenever you watch kind of like any movie on finance, you see shiny Bloomberg terminals with like 8 screens, but then like after the trade is done, you go underground and you see the rusty pipes and everything like that, which is really what blockchain is trying to fix more than anything, I feel. And I'm just excited that I get to be working on this for the next years to come.
Great. Well, thank you both for coming and answering questions. I'll dive into audience Q&A. If anyone has a question for both or either one of our panelists, feel free to drop it in. We have one right now. Sherwin, I'll give this one to you. If BTC comes out ahead at the end of Q4, it'll be the first time since 2017 it's seen 3 consecutive quarters of growth. Keeping in mind the recent Bitcoin slump, is the market performing as expected right now, particularly compared to the other post-halving periods? And what work remains to be done in terms of market structure?
Sure. So in terms of the price performance, I mean, we've had pretty limited, there's only been, a couple halvings before. And yeah, prices responded well. And the halving is an interesting event where it kind of, people debate how much of it is priced in. And for those of you that don't know, basically the halving is the halving of the emission or the inflation of Bitcoin. And so the debate comes up, oh, well, this should benefit price because now you have half of the supply, the supply hanging out there. And now the halves, right, so removes half of the selling pressure essentially from a lot of these miners who get the emission and they go out and sell it in the market. So you think price would benefit from that. And so we've seen different reactions in the past. And I think one thing I've observed is that the pricing in of this event continues to be front run. So initially it was pretty much right at the halving price benefited. Then it kind of lagged a little bit. Now it's lagged a bit, but it has benefited a little bit. And a very interesting note about our space is that the prices are, they breed this like reflexive behavior where when prices go up, it draws in this new super cycle, these flows that come in and this development in the space. And when price is down, obviously it pauses that and people perceive this lower price as lower quality and whatever, and they stay out of the space. And so I'm not sure, obviously, how price will turn out, but like Yuri and I have kind of mentioned, as the market structure, and by that I mean not only just liquidity out there, but also like he's talking about security and custody and openings for institutions to come in, as that matures and becomes a little more bulletproof, it makes these cycles and this behavior easier to be held in our space. And so a rising price, whenever that comes, will kind of manifest that, I think. So in terms of improving market structure, it's just those kind of things, allowing people to stay in here, right? Because before, no matter how much the price went up, if I can't buy in with bigger money or anything like this, it just makes it hard and you kind of let it go by. There are like not even endowments, sovereign wealth funds, which are giant money that comes in. They're like, how do I even fit this much money into the space? And I think Microstrategy doing almost $500 million in just a small amount of time with that movement price was actually pretty encouraging. But it's like things like that will help us get there and help keep price up and breed that kind of reflexive behavior. So yeah.
Yeah, one of the things that I am just was very kind of happy to see from a pricing perspective is just kind of how stable and range bound Bitcoin has been throughout, since COVID kind of really was front and center, let's say from March, after kind of the initial drop and rebound back to 10K, right? I think the fact that it's exhibited kind of this lower volatility is very positive for the space. I just recall like through 2018, 2019, as I'm trying to talk to more folks that, aren't, too far into crypto or not at all about Bitcoin, it always came as out as, too much volatility, right? Especially from the financial advisor community. And I'm happy that this recent kind of 3-4 months that we've been range bound kind of disproves that a little bit, right? Because now I can point to and say, well, look at the NASDAQ or look at, kind of some of the commodities and things like that. Like you have your clients there and Bitcoin's been a lot more stable, right? So I'm kind of glad that thesis has been playing out a little bit. But yeah, hard to say. It's difficult to comment on any kind of future pricing. So I try to avoid doing that all I can.
Great. Well, thank you everyone for coming. If you have any additional questions for our panelists, fit them in now. I'll give about 30 seconds, but if we don't hear anything, then thank you to our panelists for joining today, as well as all of you. And once again, we'll repeat that we are recording this. So if you want to go back and watch this or have anyone that you think would be interested in this, feel free to reach out to us and we will provide you the recording link. Thank you. Have a good day.